Here are 5 things you need to know about Adobe to decide, is this a company you want to invest in? Is it growing? Is it a safe investment? Is it stronger than competitors? Does it take care of its shareholders? And is it cheap? And today we are going to answer all those questions. So, Adobe just published the results for Q1 2023, and they once again beat the analyst expectations. Revenue year over year is up by 9%, but net income is unfortunately down by around 1%. Cash and cash equivalents are up by an incredible 48%, and that almost did not change in the last year. So these are some nice results. I especially like the fact that they grew their cash by almost 50% and at the same time did not increase debt. Because such actions make this company stronger. They can more easily deal with any unpredicted problems. Let's see who owns this company. Individual insiders, that is an X at 0.3% of the company owned by individual insiders. And we would like to see this number over 2%, because then we know that the management has its skin in the game. Unfortunately, in this case, it is not so. And are individual insiders buying? That is an X. In the last year, insiders sold shares worth $24.5 million and bought shares worth around $1.2 million. And do super investors own this company? That is a check with 12 super investors owning shares of Adobe. So it is a very popular stock with smart money. And are super investors buying right now? That is an X. In the last quarter, super investors bought 2,662 shares and sold over 1.2 million shares. So the difference is quite impressive. Return on invested capital. That is a check at 19.1% 10-year median returns. And we want to see this number higher than 10%, so that is a very nice result indeed. And what about free cash flow growth? That is also a check at 19.7% 10-year compound annual growth rate. Okay, we are off to a very good start. And what do we know about net profit margin? It is a check at 27%. And the sector median is 14.6%. So that shows what a strong position Adobe has on the market. They can charge substantially more for their products than the competitors and still grow the business. And now let's take a look at share buyback. It is another check. In the last 10 years, they bought back 10.3% of their shares. So that is really nice. We are getting a bigger part of the business without having to invest any extra money. And just in the last year, they bought 3% of their shares back, going from 475 million shares outstanding down to 460 million. And how is the debt looking? It is yet another check. It would take less than half a year to pay back the long-term debt with a current free cash flow. But it actually gets even better. They have more cash than they have debt, exactly $607 million more. So that is a very impressive financial health. I like it so far. Adobe does not pay any dividends currently. They used to pay dividends since 1989 till 2005, but now they are concentrating on growing the business instead of paying the shareholders through dividends. Price to earnings ratio is 34.9, so it does not look cheap at the first glance. But let's value it using a discounted cash flow formula. We will have to estimate the growth of Adobe for the next 10 years and we will make three scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 8% for the first 5 years and then 10%. In the medium, 10% and then 12%. And in the high scenario, 14% growth for the first 5 years and then 17%. So these estimates may seem high, but when we look at the growth rates of Adobe for the last 10 years, we see revenue growth of 14.9%, free cash flow growth of 19.7%, and earnings per share growth of 12.3%. So I think these estimates are pretty reasonable. And with such estimates, the intrinsic value in the low scenario is $337, in the medium $390, and in the high scenario $540. But we have to always add a margin of safety. I use a 30% one, and that allows me to make some mistakes in my predictions and still have a decent chance of making such investment work. So with a margin of safety, we get $236 in the low scenario, in the medium $273, and in the high one $378. And the current price is around $353. So we have medium and high scenarios without the margin of safety in the green, and also the high scenario with the margin of safety in the green. That is really surprising, remembering that the PE is almost 35. So when we look at this company, we really don't see any significant problems. Growth is nice, debt is absolutely under control, so it seems really safe. Profit margins are great compared to the competitors, and they are buying back shares, which is great for long-term investors. But at the same time, they are not paying any dividends, and the management does not really have its skin in the game. So it is a mixed situation concerning taking good care of shareholders. And also it seems that Adobe is really close to being fairly valued. It's not cheap, but it's also not very expensive. So we may be looking at a very interesting situation of a great company selling at a fair price. And if you want to find the best investment opportunities, then head over to our Patreon page, where for just $5 a month you gain access to our stock ranking, which makes finding cheap and great companies much easier. Thanks for watching, and bye-bye.